Hey guys, this is Market Update. In this video, we're going to look at the macro data showing us that there's no real option other than for Bitcoin to go up in value over the next 12 to 18 months because fiat currency has to go through one of its cycles of debasement and weakness. I'll show you all of that in this video. What we've seen over the last few weeks for Bitcoin's price is this kind of sideways action, right? So we got a pop on the ETFs, we came off and everyone thought that was a sell the news. Is it really a sell the news? Because we're kind of at the same price. So what we're seeing here actually is a continuation of a very, very bullish uptrend pattern. So we had the breakout from this resistance, which we tested a few times, right? So then we had this wedge, this ascending wedge, which is a bullish pattern within an uptrend, broke through that very, very well. And we came to this resistance level. And we've actually gone, up to the upside, got rejected, to the downside, got rejected. What we're actually creating here is another ascending wedge, right, from this. So this is another bullish pattern within an uptrend. And so if we actually take this trend line here, we are actually continuing that trend line up into this price action. So this is a huge ascending wedge, or ascending triangle, whatever you want to call it, with resistance at 44k. But you can see even this to the downside, we actually rejected that downside move, and now we're just climbing still within this wedge. It's a massively bullish pattern. People are asleep. The market is kind of asleep these last few weeks, right? Because actually the price has kind of been moving sideways for 6-8 weeks now, right? Despite the wicks up and down. But if you look at this pattern, it's a huge, huge uptrend with an ascending wedge at the top. It's insanely bullish. However, the Fed has said, don't go yet, right? They're saying, look, we need to keep this off for a little bit. We can't cut rates right now. We want to push it out, right? And so the Fed doesn't want the market to go. And so what we may do here is potentially not break to the upside, but maybe just kind of flatten out through this and go through a little malaise, which often happens before a halving as well. But man, we have this hugely bullish uptrend. We have the halving in a couple of months and then rate cuts coming. Like, this is incredibly bullish. And so we're going through a little bit of a, weak kind of low volume time right now, but things are very, very positive in terms of technicals and all the macro, which we'll get onto. If you do trade, Bybit deposit bonus, link in description up to $30,000. You can check the details via the link. Time is also running out to start to cut rates because things in the private sector are not good. And the public sector is taking up all of the slack. And that's not good either because you don't want a bloated state machine controlling everything in the economy. And this is supposed to be a free market and a capitalist economy, but it's not that anymore. This is the real Fed funds rate. You can see it's the highest in 20 years, right? So this has to come down. Otherwise, you're going to bankrupt all the private sector. Private companies just can't refinance, can't do anything. They can't hire anyone. This is really, really bad. This has to come down. And so you can see these are corporate bonds. You can see the maturities of these. You're looking at, over the next few years, you're having a lot of debt maturing and interest rates are very high. You can see here, high yield must refinance from an average of 5.8% to 9%. And then investment grade must refinance from 3.77 to 5.75. Rates have to come down because they're indebted. A lot of these companies if their financing rates are going up, then that is going to destroy the private sector. And you can actually see that happening with the employment figures is that civilian labor force, which is private, is going down, right? So the Fed is destroying the private sector, but all employees, government is going up. So you're seeing this kind of socialist, communist sort of economy forming where the private sector is getting destroyed. Everything's going towards the government, which is just creating debt and mispricing all of the market pricing mechanisms. It's really, really insane. Now, unfortunately, they can't stop printing debt and printing money. It's literally impossible at this point. This is a great chart to show this. This is KRE, which is the regional banking ETF, the US regional banks. And, we had the New York Bancorp, or as a New York Community Bank, went down 50% the other day. They're basically bust as well. So what you're seeing, and it happened in Europe, right, in 2008, is that private banks or private market, right, banks basically said, look, you're over. You're state controlled at this point. Right? It's now banking is a public-private partnership at this point where the government tells the banks exactly what they can do. And they tell them, don't take risk. Don't loan out money, right? And so the private sector is getting destroyed and everything is being absorbed by this bloated state, right? Which is telling everyone, don't take risks, don't do anything, right? And we have to manage this thing by printing money, debasing currency, because that system, right, is bust. Because there's no economic growth, there's no population growth. And so no one can, everything is bankrupt basically. So what they have to do is socialize all of the losses across the society by printing money and bailing out these things. This shows that, this is the regional bank index since 2015, right? So a decade of time, it's gone nowhere. It's flat, no growth at all. The same price it was trading at 10 years ago, right? And so think how much currency debasement and how much inflation has been created in that time. A huge wave. Think how much Bitcoin has gone in that time because it's a mirror to currency debasement. And so Bitcoin's up millions of percent. It went from 0 to now trading at over $40,000 a coin. This regional bank index has gone nowhere. It's created no growth. Now imagine if they didn't debase the currency and optically raise asset prices, where the price of this would be. It would be 0, right? It would be gone because it's bankrupt and they are insolvent. The banks are insolvent, they have bad debts, no one can pay them off. This is why they print money, to keep this thing flat. Because if it wasn't flat, the whole thing would explode and go bankrupt. That's why they print money, to keep these unproductive, bankrupt institutions, the economy, just even, but in real purchasing power terms, in inflation terms, this thing is getting destroyed. The safest place to put your money, in my opinion, is the assets that are growing and that are strong. So technology, they actually have cash flows that are at or above the rate of currency debasement and inflation. And that's why they outperform. Why is the Magnificent Seven outperforming? They have cash flows that are at or above the rate of inflation, and they have products and services that are the most desirable things, and so they can protect themselves against this. Bitcoin is that as well, and it's a non-corporation, which is extremely special. So if you look at US population growth, it's slowing. CPI is obviously just this relentless march upward. Inflation can be 7% or 2%, still going up. It never ever goes down. They don't let it go down. They can't let it go down. And this is a fake figure anyway, because it's manipulated as a figure. And, CPI is kept low via invention of new things. So instead of going to the cinema, you now watch Netflix, which is the digitization of that cinema. But if you actually want to go to the cinema, that's super expensive, right? And so it's a change of lifestyle because of less purchasing power of dollars. You can see the money supply is going parabolic, and Bitcoin is a mirror to the money supply and the amount of liquidity in the system. You can see money supply again just goes up, right? So if you're looking to invest, what you have to invest in is something that can protect you against the increase in money supply, creation of debt, creation of money from central banks. This doesn't go down, so it goes up. So you have to invest in assets. You can't invest in fiat currency. It's rotting away. If we look at some charts from Raoul Pal here, this is BTC. It's very clearly secular growth. It's protecting you against debasement of currency, and it has its own secular growth trend as well. And this is the NASDAQ, right? So technology, secular growth, right? It goes up to the top, it goes down to the bottom. These, swings down to the bottom feel very bad, but the fact remains is that it has secular growth. Regional banks don't have secular growth. The safest place to invest, in my opinion, is the strongest parts of the economy that are growing cash flows at or above the rate of inflation. That's the only place you can be. And so, the NASDAQ is showing that. And as we can see with Bitcoin and NASDAQ, they have their own growth rates, but they also follow the amount of liquidity into the system, which is constantly going up in waves. And as you can see here, Bitcoin's price follows the liquidity cycle extremely closely. They are one and the same thing, in my opinion. And the liquidity in the system keeps on rising. And so if it does that, Bitcoin will keep following that. And you can see the NASDAQ here as well. It's basically a one-for-one chart, right? They are the same thing. And so they have secular growth and they also go up in line with liquidity getting pumped into the system. MicroStrategy just had their annual report, or maybe their quarterly report. Something that Michael Saylor was saying here, which is very important, is that, why Bitcoin? It's because Bitcoin is not a corporation. And the only reason that these technology companies here, which have done fantastically, the only reason they outperform is because they are keeping up with the rate of currency debasement. And so they can raise their prices and lower their costs and keep their cash flows at or above the rate of inflation. But they have to consistently and constantly create new products and new services and be on that edge, taking risk all of the time to make sure that they're constantly keeping up with this debasement of the fiat currency. And of course, these are huge tech conglomerates that can do that because they have an oligopoly around the world. And so they're extremely strong, and that's why they outperform. But they are corporations, and corporations always fail. The corporations that are strong right now are different to the ones that were strong 100 years ago. Corporations always come to an end and they always fail because they get too big and bloated and they become unable to produce output at or above the rate of inflation, and other ideas take place. What's different about Bitcoin is that it's not a corporation and it doesn't have to take any risk, and it doesn't have to be different or creating anything in order to be strong, because it just simply is non-government money. It's a protocol and network that just stays as it is. And that's why it's so important, because as a saver, as a human, you don't have to constantly take risk trying to buy things that are also constantly taking risk just to remain relevant and stay up with the rate of currency debasement. You can actually be safe. You don't have to take that risk with Bitcoin because it's going to be the same thing from now for 1,000 years. It's solid. It's not going to debase itself, and everything else going on around it is the risky stuff that eventually fails, and Bitcoin can rise to the top just because everything else within the fiat system is pushing it up that way.